So you can really see that this question is loaded with fear of missing out. But what we want is patience, and what we want is some steadiness in our approach to the markets, in our approach to investing. And if you're not in the market and don't have the money, find just a little bit of money. Find something to get yourself into the market so that you can get the feel for the emotions. Hey guys, welcome back to the channel. It's Jason Pizzino on my channel here on YouTube. Let's try and answer the question that's going around the internet today, and that is now the best time to buy into the stock market? Why do I want to answer this? Mainly because it's a big question that's going on around Facebook, forums, Reddit, you name it, you find that question everywhere. Is now the best time? And I think this has come at the wrong time for many people. Why do I say that? I think it's because they've taken the saying from Warren Buffett, be fearful when others are greedy and greedy when others are fearful, way too literally. And they think they're going to be the next Warren Buffett. So where I see this a lot is on Facebook, and many of the financial groups are asking that question, is now the best time? When should I buy? Is the bottom in? How do I know when the bottom's in? What do I do? All these sorts of questions, and it seems really apparent to me that this has come up a lot more now than it did on the previous dips, and we've seen dips over the last 10 years. But now it just seems like everyone is asking the question, and to me that seems like a bit of a signal to say that, well, maybe now isn't the right time, and it looks like some people are going to be trying to catch a falling knife. So if you ever heard that saying, it just means they're going to keep trying to buy the dip. And the problem with that is that you can run out of money while continuing to try to catch the next dip. And so by the time the bottom comes in, you're completely exhausted, you're emotionally wrecked, your emotional bank account is just dried up because you just keep seeing your money, your investment dwindle down, down, and down, and down. And that isn't a position that we want to be in, because we need to be emotionally strong when it comes time to invest. Easiest way to do that is with a plan. And before I get into that plan, and probably many of you that have been watching the channel for some time now know what the plan is, I will just make mention to the guys who have been talking about a recession coming in for the last 10 or so years. You know who I'm talking about. It's sort of the doomsday sayers that you'll see making comments on Facebook or on Instagram or Reddit or any of the forums online, and the guys that like to prep, the preppers, where they're just starting to store a lot of food and guns and all this sort of jazz. I don't have anything against it. It's what they want to do, and they feel like that's the best way to live going forward. But in my opinion, I think that is the wrong way to be looking at the world, that everything's going to come to an end and then you got to fend off the army or the government or the neighbors coming over to your place to take what's yours. Personally, I don't see that that's going to happen anytime soon. And again, you probably know why that is. We've got our property cycle that we look at. Another thing with the question, is now the best time to buy? I often meet it with, in relation to what? If you're saying is now the best time in relation to 3 years ago, prices were lower 3 years ago. So 3 years ago was a better time to buy. But if you're saying in relation to 3 weeks ago, prices were higher. So yes, now is a better time to buy than it was 3 weeks ago. So you can really see that this question is loaded with fear of missing out. But what we want is patience, and what we want is some steadiness in our approach to the markets, in our approach to investing. And that is why I keep coming back to the property cycle. If you haven't seen it or heard of it, go and check out this video that I'll leave a link to up here and just review it. It is dry at times because there's just information in it. There's no other way to make it sexy. So moving on with the property cycle is just an easy way to give us some guidance for the future. We're not sure exactly when any of these events are going to happen, like in a time frame, we don't know exactly when, but we have an understanding of approximately when, and we can prepare for them. And then as we see the signals come through, we can act at that time. But of course, there is no guarantee in any of this. This is just the best strategy that I have seen and used myself, and I'm sharing it with you, and hopefully you get the same out of it, if not better. So if no one knows when the best time to buy is, how do we know when to get in? And this leads me back to the plan. And like I've said, if you're a familiar viewer of the channel, you know I advocate for dollar cost averaging. It's a really simple, easy to action plan. You set up everything you need to do at the start and just go for it. And if you haven't heard of dollar cost averaging, leave me a comment down below and I'll make a specific video on that for you guys. As I said, I think it's a little bit concerning seeing all of these questions come up on Facebook forums from probably very new investors asking if now is the right time, probably having never done any investing in their life, let alone now at a really emotional time in the market. And I say emotional is because the market is falling, and those feelings that come up when you're losing money are very hard to get through if this is your first time. From my YouTube stats, it shows that many of my viewers may not have experienced a 2008 global financial crisis, so you wouldn't have been through a big bear market that we've seen in the past. And some of the viewers from the questions that I've seen may have not been investing at that time and wouldn't have been following the market themselves. From my experience, I have bought property prior to the GFC. I sat through the GFC. In Australia, it wasn't as bad, so it's not too much of an issue. But then I also bought into the mining boom and sat through the mining boom and lost a lot of money in that. So there are these times that we have all experienced, maybe once, twice, who knows. If you're in crypto like I was, you would have experienced a mega bull market and possibly sat through the bear market as well. I know I sure did. I definitely sat through all of that, and you get a real feel for what it's like to be in a bull market and a bear market. And it starts to make your skin a little bit thicker, your eyes a little bit wiser, but definitely doesn't make you immune to taking silly trades at times. That is, again, another reason for the plan. And I also have a few easy steps to follow. The real guidance on these steps is how well I sleep at night. And if you've ever experienced it, you probably know what I'm talking about here. If you can't sleep easy, something is wrong. You don't know what it is, and it brings up anxiety. And the only way we can get rid of that anxiety is to work through it. Usually a plan helps. A few easy steps that I've added to my plan, which may help you guys out along the way as well. Feel free to alter them to suit you, but make sure you test them first. 1, have a buffer. And in my case, what I know suits me is 12 months worth of living expenses. That's going to be different in everyone's case, but for me, that's the feel that I like. Any less, I start to get a bit stressed. Any more, I feel like I can use a bit of that money elsewhere in better investments. Number 2 is never invest more than I can comfortably afford to lose. And again, it comes from emotion, but then you write it into a rule. What I mean by that is if you have too much money in the market, I know I've done this before, there's too much in there, you are thinking about it all the time. And as you sleep, as you wake up, you're exercising any time of day, you think, is the market going up because I need to get this money back, or I want to make more money on this? And if it's too much, they're the feelings that usually come up. So we need to just reduce that position to a point that is comfortable. We don't even think about it. And over time, sometimes that can build up. Sometimes you might have a high tolerance initially, sometimes you might have a low tolerance. But that essentially is understanding your risk tolerance. Number 3, have a trading plan of when to buy, when to sell, and how to manage my investment. Like I said, it comes down to the dollar cost averaging. You also may have a different plan that works for you. It's basically getting in, getting out, and then the journey. How do you manage that journey? And lastly is looking after my health. That's physically, emotionally, mentally. Health is of utmost importance when it comes to investing, because if you're not physically fit, mentally fit, it makes the game that much harder. For me, I like to be physically fit as well because I don't like sitting down for long periods of the day. So I need to get out and get my energy out. Otherwise, my energy manifests into other areas, and that can sometimes be in the investment world, and it doesn't come out with very good results. So I need to expel that energy in other ways. That's why I'm always exercising. I'm at the gym, I'm surfing, running, whatever it is. I like to get a lot of energy out every single day. Mentally and emotionally, I'm reading, I'm writing down notes, I'm creating step-by-step plans for myself, and then just trying to break them down to make them even more simple, because the last thing I want is something that's difficult to implement when the times get really tough. If you find yourself struggling with any of these steps above, or if you need clarification on other steps, hit me up on Facebook. I run a group on there, Optimize Your Life, where we run through all of these step-by-step processes and break them down into easier to action plans so that we can design our lifestyles to be much easier for ourselves. I've also got a community group, and I don't know, I've always found it easier and more enjoyable, more fun in my day to spend it with like-minded people. So go and follow me on Facebook, and when you're ready for it, there's also the group there. So now you've got a simple approach and some other guidelines to manage the emotional and mental stresses of trading with your plan. The next part is the action, and that's all up to you. As they say, the riches are made in the recessions. So what are you waiting for? The best part about the recessions is that they are often sharp and short-lived. So honestly, I still think there's time to get in. I still think there's plenty of time for this market to continue doing what it's doing. Maybe it's going to go down a bit more, maybe it's going to go sideways, But I think there's a lot of time to get your plan together. Having said that, I don't think you should be sitting on your hands. Now's the time to start cutting back on your sloppy spending. Now is also the time to start generating as much money as you can and putting that into an investment plan. This could be the start of a really good investment career for you if you get the timing and your plan rock solid. For those that are in the market, do not panic sell and don't watch the market daily. If you're in crypto, watching that through 2008, you know the pains of watching something daily. Don't do it to yourself. You will run your emotional bank account dry. It's a disaster. And if you're not in the market and don't have the money, find just a little bit of money. Find something to get yourself into the market so that you can get the feel for the emotions. This is a really good time to start to educate yourself and educate your risk tolerance in the market, especially in a bear market, so that when it comes up again in the future, which it inevitably does, you will be that one step wiser. You'll understand what the emotions are that are coming out. And like you read with any good trading or investment book, emotions are the majority of the game. The plan is very simple, but we love to run on emotions and we generally act on them. So get into the market whichever way you can. If it's a fraction of a share, whatever it is, give it a crack, and at least you get to experience what it's like. Now, I'm not saying watch and follow the market daily, but you'll be more actively engaged in it if you're participating. Record your emotions if you do this. Note how you feel on a weekly basis or a monthly basis. It's an exercise that you can't buy. Well, you can buy if you get into it now, but in the future, you can't go back and remember what it's like if you weren't in the market. It's an invaluable experience. That's enough said from me on the topic of is now the best time to buy into the stock market. I hope you enjoyed that video. If you did, leave me a like, subscribe to the channel, hit the notification bell, and I'll see you guys at the next video. Remember, until next time, have more fun to get more done.